Dark Wraith Publishing presents the Illinois State Collegiate Compendium.
Today, we will be talking about accrual-basis and cash-basis accounting. These two methods describe the way in which a company reports its revenues and expenses on an income statement. For the accrual method, revenues are reported when they are earned, meaning that a company can report revenues even when cash hasn't been received yet. Expenses are reported in the same manner, when they're incurred and not when they're paid. For the cash method, revenues are reported when cash is received, and expenses are reported when cash is paid out. In order to demonstrate this topic, two employers from separate industries were interviewed on which method they use and why. The first employer is an entrepreneur named Frank Pedota, who runs an Italian deli, and the second is his brother, Joseph Pedota, who is a partner at an accounting firm. After both interviews, their answers to the question will be compared and analyzed to come to a conclusion.
Hi, my name is Frank Pedota. I'm the owner of Bari Foods with my brother Ralph Pedota. We're partners, but we are under a C Corp, not an S Corp. We are a retail Italian deli, and we also carry grocery items too. Been here a long time, since 1973. It's almost 40 years now.
So, how do you record for your revenues and expenses?
Well, we're on a cash basis because all of our sales are immediate. You know, we sell a sandwich or a pasta dish, and it's immediate payment. We really have no customers that we bill at a later date. Either pay with cash or a credit card, and on occasion with a check. So, and our expenses also, most of our deliveries, it's a COD basis, cash on delivery. You know, we pay with a check or cash. There's only like two accounts that we pay at the end of the month, which would be our bread, Liborio Bakery, and the Frito-Lay chips. And our meat guy we pay at the end of the week, once a week. But it's a cash basis.
Why do you use this method?
Well, from our perspective, it is the best and most, it's the way that makes the most sense. You know, I mean, there's no billing, so, you know, everything's posted immediately. Our sales, our purchases, except for a couple items. There's a couple of exceptions that I had spoken about previously, you know, Frito-Lay, Liborio at the end of the month, and the meat at the end of the week. Everything is immediate payment. So, and our sales are immediate, so it definitely makes the most sense.
Hi, I'm Joe Pedota. I'm the managing partner of George Bagley & Company. We're a CPA firm. We've been in existence for over 90 years.
So how do you record for revenues and expenses?
Well, for the firm, we record revenue and expenses on the accrual method. And the major reason why we do that is we need to get the proper revenues and the expenses, because at the end of the day, that's what determines the profits for the firm, and then that's how we accurately divide up the profits between the partners. And the other reason why is because our busy season, we're a fiscal year end April 30th, and majority of our work is from January through April, and we don't bill our clients until usually the work is done, which is after April 15th, but before April 30th. So that's when we do our billing. So we're on the accrual method to determine what kind of revenue we've done for the year. And then expenses, again, on the accrual method to determine and match up the expenses along with the revenues for that year.
From their responses, Frank uses the cash method while Joe uses the accrual method. Each of their businesses requires different methods of accounting because they both handle and use cash differently. Frank has customers who buy sandwiches who pay for them immediately, while Joe has clients who pay for his services once he completes them. In conclusion, the method that a company decides to use depends on the type of company and what their preference is. This concludes the presentation on accrual basis versus cash basis accounting. I hope you guys learned a lot.